Hi, everyone. Welcome to the Analyze Your Trade event number 202. This is the new live charting format, and we have 6 educators and analysts prepared to talk to you today. So, of course, this is for educational purposes only. Trading is not suitable for all people. Be sure to consult a financial advisor and only trade with money you can afford to lose. And all sessions are being recorded individually, and those will be available on Timing Research as soon as I can get them posted. So first up is Michael Katz. So I'm going to go ahead and turn it over to him.
Yeah, thanks, David. How are you doing, guys? So, all righty. So let me just get to know you a little bit, and I will quickly share some of my background. So, are you trading? Maybe type in the chat box. Are you trading stocks, futures, commodities, forex? What are you usually doing in trading? Besides that, I'll tell you a little bit about myself. So my name is Michael. I've been trading for the last 15 years. I'm the CEO of Traderpool. Traderpool is an online prop firm that fund stock traders. So basically, you go through evaluation phase, and if you pass that, we give you funds to trade on. And yeah, so we actually the first online prop that made that available for specifically for day trader, at least for now. Okay, so you're trading stocks, forex and futures, options. Alrighty. So first of all, feel free to drop some symbols if you like me to analyze them with you. I'll share some of my analysis on the market today, and maybe a trade I made on Tesla just before we started this event. We'll start with the market, the NQ. So basically, when I'm analyzing the charts, I'm always going first to the NQ. I'm a day trader by nature, so you won't see me usually go to the weekly chart or anything like that. If you want me to, feel free, and I will. But for my trading, I always go to the 4H or maybe an hourly chart, and then start my analysis from there and dive in to a 1-minute chart. So let's talk about the NQ. In the last few weeks or so, I had some live trading analysis and pre-market here and there. And basically, I drew this trend line. This is an NQ, the Nasdaq 100 future on an hourly chart. So I drew this trend line, or maybe a channel. You can see it pretty clearly. It bounces, the prices bounces from the lows and the highs, broke through it, retested, broke it again, retested it, and then dropped down just a few days ago to the bottom of the channel. 2 days ago, when we had the data that came out, put a tail on it, went all the way up, and now dropped again to the same level. So you can see it pretty clearly and nicely. The channel is working perfectly. And right now we are playing with the 200 EMA. That's the green line here. 200 EMA, exponential moving average, that I usually working with, and the channel. So we got those two that help in the price basically bounce up. Buyers are buying it around the 200 EMA. Of course, I'm not the only one that have this channel on the chart. So a lot of movement, and it's also 12,500 on the Nasdaq, like a round number that also help bring more buyers to the table. So what we're seeing right now is that we are holding this position, and what I usually will do is basically create 2 scenarios that I want to see. One of them usually occur, And as soon as I see that, I can react upon it. So let's say the first scenario will be obviously continue to the upside, trying to reach those previous levels. You can see it around the 12,800 area. And if we'll break through them, we should continue higher to the previous, the upper channel, the upper line of the channel. That's one scenario. Of course, in the middle, you will have a lot of retest and all of those things, so you can buy the dip on those. The second option that looks a little bit better, in my opinion, and I'll touch on that in a second, is actually breaking the level, retest it, going back and retest the 200 EMA, or maybe even the lower line of the channel, and from there continue to the downside. Now, the reason it looks a little bit better than the previous option, meaning going up, because we are getting a bit weaker as buyers coming in. You can see that when we dropped, buyers held it, pushed the price higher, but didn't do a lot of movement to the upside. Then again, we touched the trend line or the channel, did move up, but not too much. So we're not seeing those movement as we saw in the previous times that we touched the channel. So the buyer's wave or trend looks a bit weaker. We need a very strong momentum to push toward and basically break through this candle in order to continue to the upside. It's an hourly chart, so it could be in the next few hours up to a few days. So I guess middle of next week, or even at the end of next week, we will figure out and see if we will continue to the upside or break the channel, retest it, and go down. If we will continue to the downside, of course, the first place or area that we want to check will be at around 12,200. That's basically a place you should find, the market should find support, and a great place to take some profits off in case you entered that short. Of course, you can trade the future, you can trade the ETF, the QQQ, or the SQQQ, or the TQQQ, or whatever. Or you can trade big companies like Tesla, Apple, Amazon, Google that usually will go with the market. So either way, if you understand or you find that the scenario is taking form, you can again act and execute accordingly, either by taking the market or by just taking some big names companies. The S&P looking pretty much the same, but not as volatile as you can expect comparing to the NASDAQ. Same thing here. We have, let me see if I have it here. Yeah, so we have the channel. We actually have two channels in the S&P. One, let me take the 4-hour chart. Okay, so we have a wider channel that we are moving in, or the other one, the dashes that you see here, that's pretty much the same to the NASDAQ, the one that we just saw. And you can see that we are quite aggressive when it comes to the downside, because every time we pushed higher, the last time that we pushed higher wasn't that strong enough to really continue to the upside and reach the upper level of the channel. So it will be interesting to see if we are actually holding here and pushing really higher, or actually the second scenario, as you can see, it's already, I talked about it 2 days ago. So basically breaking the level here of the channel, retesting it, and then dropping down again. You can mark this trend line to be one of your guidelines. So in case we will break through it and retest the area of the 41.50, We can understand if we continue to the upside, if we will continue to the upside, or again, reaching to this area, dropping down, breaking, retesting, and continue to the downside. So either way, when you have those charts, when you have those lines in front of you, it's much easier. At least for me, I saw during my trading years, I saw that it's much easier to execute a trade when you have it in front of you, when you have the scenario right in front of you, because mentally you can you understand it. You don't need to really analyze in real time and make a decision in real time. You actually have you prepared yourself, so you know what to do, and your mind is kind of set to do that. So if you have those trend lines, you can definitely work with that for the next few days, maybe a week or so. The next level, as you can see, first we have 200 EMA perfectly worked before. So as we know, when something worked before, it should work again until it's not. But you can see that around the area of the 200 EMA, buyers came in and pushed the price up every time. So first we can expect it to happen again. And if we break it, the next level should be the low of the bigger channel that we just saw, and that's around the 4,000. Either way, just trade the scenario. Don't try to predict what the market will do. I always create two scenarios, one for the upside, the other to the downside, and wait to see what will happen. As soon as I see that one of the scenario is occurring, then I can act. It's much easier to trade that way. And to be honest, at least for me, but I'm pretty sure it will be for you as well. You will see better results as soon as you will start shifting to that direction of creating scenarios and trade the plan basically as soon as it occurred. So that's for the S&P. Another one to look at is the VIX, the volatility index. And that's a great indicator for understanding what the market, the S&P will do. As you probably are aware, the VIX and the S&P are working in a negative correlation. So every time the S&P is moving higher, the VIX dropping down, and the opposite. And in this case, you can actually see we opened with a gap up yesterday on the VIX in a 4-hour chart, and it dropped down to the $20 level, held it perfectly as support, and then bounced up. So the bounce up, basically the opposite from the S&P. This S&P dropping down as soon as the VIX popping up, and we can understand. If we can understand what's the next level for the VIX, the next resistance level for the VIX, we will see that if it will reach that level, the price of the S&P will go up, as the VIX will probably, because of that level, will go down. So this is the same level we had a few months ago, around the 2150. So if we'll go there and reach the level, we should see a resistance coming from that area of the 2150s as we had previously. And that means that the VIX will drop down, which means that the S&P will go up. So when we have those numbers, or at least those areas, we can start working with a correlated to this for the SPY, with the SPY, and it will be in most cases very, very similar. One is reaching resistance, the other support, and they switch in places. Maybe one more thing that you can work with is what I'm using is the MACD, MACD. I guess most of you heard of it or tried it at least once, but the MACD is basically combined of 3 EMAs, 3 exponential moving averages, and what I'm looking for is divergence between what the chart showing me and what the and what the MACD is showing me. So basically, let's try to take a chart to see it more clearly. Let's take the NASDAQ. Let's go to the 15. Okay, so for example, you can see it pretty clearly here. That's a great one to learn from. We had a nice drop and created a low. Then the MACD created as well another low. And then we had a new low right here. And the MACD, instead of creating a new low, like what the chart did, it actually created a higher low. So basically, this is then a positive deviation. And in most cases, it will indicate or could indicate of a reverse movement that might occur. Obviously, as you can see, it bounced up, then dropped down again, then bounced up, drop, and only then after a few weeks, or it's a 15, so after a day or so, it actually started to move up. So you can work with it just to give you another, extra like V on your check mark, like the check mark on your list, that will help you understand if the price should continue to the downside or maybe flip to the upside. So you can either trade it and take the reversal, or maybe not go into shorts because you see that we are, sitting on a strong support level. The MACD is creating a positive deviation, divergence, and you also have high volume coming in at the bottom. That's usually will indicate a reversal, those three elements together. So what I usually do with that is looking at around the 1H, the hourly chart, and I would look for those kind of movement, either either positive or negative diversions. If I'm trying to create the scenario for the MACD, what we can might see, again, this is only analysis. We need to see it exactly occurring in order to trade it. But let's say if the price of the NQ will continue higher, right, and break through this resistance, this previous high, let's say to those levels right here, and the MACD, instead of breaking also through to a new high, will actually stay lower than the previous high, then we will have a negative divergence. So in this case, it might indicate that the price will reverse. So you can take that also into consideration. I really like working with the MACD and the 200 EMA. But we do need to remember, and that's probably the most important thing when it comes to price action, is that price and volume are the keys, the key to all of it, right? The EMAs, the MACD, the RSI, whatever it is that you're using, it's always will be something that you will take from the price of the volume and create an indicator from it. So either the highs or the lows or the close or the open of the candle, and then with volume or without it. But all the indicators that you are using right now are basically coming from the chart, so the price. So if you analyze the price the right way, that will be much valuable instead of just going to chart, instead of just going to indicators, because I see a lot of traders have like 5 or even 10 indicators on the charts and not really looking on the candles, not looking on the price section. And that should be the opposite way. You should understand the chart, the volume, and only then add those indicators to complete or add an extra edge to your trading. Hope it makes sense. Okay, so that's my analysis for the market. This is something that I do every day in order to prepare myself to the trading session. Again, you guys are trading swing or day trading? What are you usually prefer to trade, swing or day trading? Okay, I see Starbucks and pound dollar. If you have more stocks, type them in, let me know. One, for example, trade I made on Tesla today. Let me pull up the chart. Was because I took that movement of the SPY on the S&P basically, and I saw that the price is sitting like we saw here. The price reached that 200 EMA and the lower line of the channel, so it makes sense that the price will bounce up before it will drop again or not. But the first reaction should be a bounce up. We are entering a major support level with coming from 3 different angles. So it makes sense that the price will bounce. So as soon as Tesla began to drop at pre-market, I can understand that when we are reaching a support level, it makes sense that the price will bounce up again. And you can see some few parameters, sorry, that supporting that. Besides the market that was in a great place to bounce up, Tesla already dropped from 217 all the way to 209, so it also increased the sense that it will bounce up. Again, doesn't mean that it will go all the way up or change the direction completely, but at least a first bounce, it makes sense to see. We reached that 209, that's a round number. Pivot point, for those of you who know what it is, if you're trading intraday, you probably are. So we reached that support level, and you can see also the MACD, the MACD that we just talked about, also created a positive divergence. So you can say that the lows are moving higher while the lows in the price are moving lower, right? So a new lower low, while the price creating a new higher low. So you have that positive deviation, diversion. You have the support level coming from the 209, either the pivot and the round number. You have the S&P or the Nasdaq looking pretty good to the upside. So all of those things together combined made me click and start trading, buying Tesla. I actually didn't buy it at the bottom here. I missed that just because I came to a little bit late to the computer. So I started to buy from this area. When it pulled back, I entered and bought more and basically sold it at the top. But that's something that I really enjoy and usually would prefer to do. Just working a lot lately on Tesla. Other option is to go through the scanners, of course, and start looking for those stocks in play, basically. So, stocks that are gapping up or down because of earning reports or layoff, new product, FDA approved, whatever it is. And from there, go to the chart, analyze the hourly chart, put your lines, the support resistance level, create the scenario as I showed you on the NQ, for example, and then build your trade intraday. Alrighty. So let's see what you said. If you're typing a symbol, please let me know if you're looking to trade it like long, short, swing. What exactly are you looking at? So I can have more information and can help you a bit more. Alrighty. Let's look at Starbucks. Okay, so I guess most of you are telling me you're looking for swing trading. If it's intraday, like if it's day trade, feel free to say it, and then we'll look closely. Generally speaking, Starbucks made a nice move, like in the Corona time, obviously from 55 to 126, returned almost all of it, like 70%, and bounced up again. First thing that I'm looking at is this channel that the price is trading in, right? It's pretty clear that we have the bottom and the top, that every time we're reaching a certain level, the price is dropping down from it, either resistance coming from the history or basically the channel. Obviously, a lot of algos are working with trend lines and channels, so you can see in most cases you will see a drop or a bounce when reaching a support or resistance level from an accurate channel. A few other things that I see here is just things that are coming in mind. So the drop in the MACD showing us weakness of buyers at this area, and we did see a drop, but most cases we will see another drop when it comes to a negative diversion. And if we zooming in, to be honest, I don't see a lot actually. We did close that gap. I can create some scenarios and work according to that. So let's say if we'll break this trend line coming from the bottom here and retest it at around 104, that could be a nice place to look for the downside and understand that we might have more room to the 95, like the 200 EMA, or even closing those gaps from last November or so. That could be one scenario to look for. Of course, I'm on the daily chart. We will drop to the hourly chart in a second. Going higher, we only have this nice resistance at around 117. So that's plenty of room to the upside as well. And also, if we'll close the gap, we still got 119 or so. Yeah, so we have plenty of room, both scenarios, up and down. I don't see a place to enter at the moment. Either way, even if it will continue to the upside, and run in one day to the 117 or so, I don't see a specific point to enter the trade. Look a little bit bearish, maybe to drop to take some liquidity out and then bounce up. But to be honest, I don't have a lot to say about Starbucks at the moment. Yeah, the version, you bought a put spread 2 days. Okay. Well, maybe what I would have created, like the scenario, is either taking that short if we will drop below the trend line after retesting it, or waiting to buy the dip around the 100 level when we will close the gap. So, and try to play on around that. Those are like short moves, like comparing to taking it for like a month or so. That should be pretty quick moves. Let's see the 1 hour, like an hourly chart, to see if there is anything there as well. Whenever I'm analyzing, I always play with the time frame in case I don't see something in one place, let's say the daily chart, I will go to a 1H or a 4H, and then try to see if something that you usually missed from the daily chart. But to be honest, I don't see anything besides that. Again, that's a nice negative correlation between the MACD and the price, but nothing to write home about. And that's fine too. Sometimes you can leave the stock and let it work a little bit more until you decide what to do. That's also good. Okay. Let's see what else. Roku. Great move after earnings, Roku. 490 all the way to 50. You can only see those move when trading stocks. You won't see a pair of Forex doing those kind of moves. Okay, great trend line that it broke lately. Retest the area of this like a sideway area that we had, and now pushing higher on the daily chart. What I see is a short opportunity, maybe again, maybe a small move. I don't know if a small move, but a short-term move will be more accurate. And we see that the price is moving pretty rapidly to the upside, going all the way to the maybe to the 200 EMAs. And you can also see the MACD coming a little bit weaker than what we expect in this kind of move, right? The closes are getting a bit weaker. We already broke through kind of nicely on the price. We broke through the previous high, but the MACD is way lagging. So what I would expect to see, I would love to see that we will reach the 200 EMA while the MACDs continue to showing us weakness. So basically, let's do this. So you will see the price reaching 200 EMA. You will see the MACD reaching something around here. So it will be something like that. And then it will be, and you should see a very high volume coming in when we'll reach that 200 EMA. If you'll get those three options together, those three parameters, that could be a great way to place your short. And it's also will be, I guess, a round number, or, you know, this type of support around the 80, 79, 80, something like that. So that could be a great, a great place to look for at least a dip until we reach again those support levels at around 63 or so, or maybe entering the gap, and then cover the short, look for the upside again. The beautiful thing about trading, it doesn't matter if you're doing swing, but of course in day trading, is that you can play both ways, and you don't really have to, you know, wait for until it makes a really strong move to the upside, and only then look for a short opportunity, because it obviously depends on your style and yeah, what you're looking to get in trading and what you like to do. But you can easily short those small movement and buy those small movement, and once in a while you'll have a long-term trade that will actually make a very strong move. But in these cases, like what I do in day trading, I just look to trade the next level. So if I'm taking that short on Roku, that could be a great move to the downside all the way to the 68, or maybe even closing the gap at around 63. And that's it. That's fine. That's the short trade. And now I can wait or just close that trade, get to the point when I have enough confirmation to the long trade. So I can see, let's say it dropped down and close that gap. I can see that it's holding right now. It's holding the position, and now I can go long again and try to break through the level. So feel free to play with it, because that's one of the edges that we have when it comes to trading. We can go both ways. So that's Roku. Let's see the hourly chart. Just interesting to see. Beautiful, held it beautifully at 200 EMA. I see an open gap here, small one at around 84. So that could be also a place maybe to go with your stop loss to that level. So let's say if the price will reach the 200 EMA from the daily chart, maybe we'll break through it intraday, but we'll leave a tail at around 84. So like a shooting star, that could be also a place to mark your stop loss. Interesting, very interesting Roku to watch for the next few days. Let's see. Okay, kind of looking like Starbucks, to be honest. Maybe a bit weaker, but same chart, you know, a sideway with a little bit of trend up, negative diversion here. Not a lot to do with. We do have this resistance level at 149, 150-ish. Either breaking through it, retesting it, and continue to the upside, or better option for me at least, that would be a too stiff of a trend line, and that's too far. So yeah, not a lot that I can tell about Etsy on a daily chart, at least. If we go to the 1H, we can create some scenario that we will break this area of the 130, 125-ish. So let's say if we'll drop, break that, retest those levels, and from there continue to the downside, maybe even to the 110. Obviously, all of either way, the swing trading is very much, unless you found a specific stock that really disconnected from the market, in most cases, it will correlate with the S&P or the NASDAQ. So definitely look at the NASDAQ and the S&P first, and then only decide if you're going in or not. But obviously 70-80% of those stocks will move with the market. Okay, MPC. Right. So we can look at also, if we're talking about, I saw one of you guys wrote DVN and S, like energy companies. And we can see that when we try to trade, especially in the industry of the energy sector, when we want to trade a stock coming from the energy sector, you really want to pay attention to the energy and of course the oil as well, the future, the crude oil, because those stocks usually will have a very tight correlation between what the master is doing and what they will do. Obviously, you can see it in all sectors, but specifically in energy, you will see it much more. When the energy is dropping, they are all going together. They have this really tight correlation. So of course you can, in the XLE, the energy ETF, you can of course mark this trend line that might be, let's try to redraw a channel with that. I usually like to draw a perfect channel, like really parallel, but I don't see it at the moment. So you do have this trend line that you can work with. We are on the daily chart, so plenty of room to this lower trend line. We didn't break through the eye, so we're still looking pretty similar in the MACD and the chart. You can draw this trend line from the highs and wait to see if it retest it, break through it and retest it and go higher. But I guess we should go to the crude oil and analyze that in order to get the full picture. 200 EMA in this case, not doing a lot. Let's see the weekly chart as well. Right, so did we break through it? Okay, not yet. So we do have this resistance level at around 95 that we didn't reach it yet. So an interesting scenario will be moving higher to the 95 resistance area, 95, 90, 98. And from there, look for the downside in XLE and obviously other stocks as well. So we still got room to do that, but make sure you're not missing the resistance from the 95, 98, because a lot of stocks, as soon as we'll reach that, you will probably see a lot of stocks dropping down. So you could either create a scenario on one of those stocks like DVN, S, and the others that as soon as the XLE will reach resistance, they will drop and you can take them, for example, or other stocks that you will find in the sector of the energy that looks pretty good to the downside. And it just need the XLE to reach the resistance in order to drop down. So try to correlate your play with that. From this specific place, I don't see anything to do at the moment. Maybe if we will drop to the support level of the trend line or to the 70s, and then look for buying the dip, going up to the resistance, and then dropping again. We need to remember that price is always moving, magneting to those levels of liquidity, support, resistance, supply, demand. Doesn't matter which one, trend lines or indicator or just historical price gaps and all of those. And basically, so when we understand that, we can expect the price to reach the 95 or the 98 because that's a liquidity place that the market would like to go to. Now we don't know how they will go to, so it could drop, take some liquidity from the bottom and go all the way up and then reach it, or maybe just a quick pop to the upside, reaching those levels and then drop. And the only thing we have to do is wait for either way. Either a drop to the 70s would be a great buying opportunity. I don't know if it will go all the way to the 95, at least when we reach the 70s, but that could be a great place to look for, at least to going all the way up to the 80s, like 80, 82 or so. And if we continue, you know that you have enough place to go all the way to the 95 or the 98, because that's the next major resistance level. This is what I would usually look for, just bouncing from those levels and understand what next, what is the next major liquidity area that the market probably would like to achieve, and then build a scenario around this. Okay, Apple. We're on a weekly chart. Not a safe territory for me. But yeah, we have this nice trend line. It's actually, we can almost a perfect channel. Yeah, we can work it like this. And right now we, reaching or getting closer to the upper level. So of course we can expect a resistance level at around 160, but we still got $5 to go. But let's go to the 1H. It will be easier to see some activities. Oh, that's actually a great thing to learn from. First of all, we can mark the levels here and maybe even create it as a channel. Yeah, that could be a good one to mark on Apple on our hourly chart. And this is something you want to keep an eye on. We had the report a few days ago, and look at the volume coming in. Of course, when it comes to a report, you usually will see a high volume, but in most cases, when we have high volume coming in already after we made a nice move, we can expect for a potential reversal. It doesn't have to be right at the first candle and the first high volume. It could be another leg to the upside and then the shift. But this is one nice indicator or signal that you can watch for. So let's say if we will break through the previous high, reaching those levels of the 60, 85, 185, looking great to the downside. First of all, we have this area of 185, then we have the gap open at 160 and maybe the 163. So going higher to those levels, getting resistance from those levels, MACD will create a diversion, negative diversion. You will see another volume coming in, a strong volume coming in that will be higher than the previous one. And from there, a nice short, maybe to the downside, all the way to the lower level of the channel. That would be a great scenario to watch for. Other option, if the market will drop, then we might test the previous support from the trend line, bounce a little bit from it, then break it, retest it, and drop again. That could be also a great scenario, closing this gap at around 150, 145 or so, reaching the 200 EMA as it held support and acted as resistance previously. It should react again. And that could be also a great move on Apple, either way. So either waiting for the short from those levels or shorting it as it break and retest the trend line. It's like a $5-7 move when it comes to breaking it and retesting it. Alrighty. So I say that you have a little bit more, but we're coming to the end of the session. Hope you had a good session, and I hope I gave you a little bit things to think about. Let me drop the URL for Trade the Pool if you guys interested in checking us out. Like I said before, Trade the Pool is an online prop firm that funds stock day traders. At the moment, day traders, we are working on a possibility for swing trading as well. It will come hopefully in the next month. And basically what you do is go through an evaluation phase. If you pass it, we give you fund, you trade with us and split the profit, simply as that. So you should definitely check us out. And of course, we have 14 days free trial. So, just go ahead, sign up. No credit card needed or anything like that. That's it, guys. Thanks so much. See you next time, David.